Okay, so you know all these people online that constantly hype everything, that everything's hype worthy, institutions buying is so hype worthy. No, this just goes to show that all of the YouTubers you've been following all year long don't know and haven't even spent the time to learn anything about the markets. They're misinformed, misled, stuck in their circle of narrative churning nonsense, regurgitating off of each other, and again, have not been in any way, shape, or form beneficial to this community. Let's go ahead and take a look at retail investors never has been. So I've been thinking and diligently searching for evidence that I firmly do not believe that retail investors have had as big of an impact as we're all trying to assume. And like many of the YouTubers and false personalities online like to pretend and fake that we're some giant ape community. This report agrees with my original thoughts, and I can't believe I actually found this. Let's go and take a look. So, retail investor trends. This is by IHS Markit, revisiting the impact of retail activity, February 2021. Now, for the last month, I've seen data that shows retail investors have not been an impact despite the constant narrative being pushed by the media, Wall Street, and the false personas and talking heads that like to insert themselves in leadership positions all over the internet. This further discredits all YouTubers trying to create an ape nation for the purpose of changing the world, or that we're in a movement. This paper supports my prediction that it's all noise and all for the YouTuber's personal gain. You have to understand, because these people have nothing to offer, as soon as the music stops, they are irrelevant again, and they're trying their darndest to stay relevant, just like banks are. It's the same thing, the same type of enemy. People who are incompetent, intellectually dishonest, and who don't want to put in the work for the community to actually tell them and teach them how things really work. So some key takeaways. No fee trading platforms for retail investors began seeing widespread adoption in quarter 4 of 2019, leading to the speculation throughout the first half of 2020 on the impact of retail investors to the broader market and equity prices. Our team analyzed custodial data associated with the top retail brokers offering online trading at the time, and our July 2020 report found that retail participation had a much more limited impact on overall volume than headlines were suggesting, though the group favored buying over selling. Given the recent headlines surrounding GameStop and day traders on Reddit, our team revisited this analysis, quantifying the impact of retail participation from June 2020 through the end of January 2021. The last 7 months showed a surprising level of consistency for the online or no-fee retail community in terms of average percent of volume across the 17 trillion in equities we advise. Despite the headlines from Wall Street Journal, CNBC, and PRN Newswire, the ones that all of these YouTubers like to cling to and disseminate because they assume that they're on our side, the growth in net ownership across almost all sectors largely accounts for just 3 to 4% of daily trading volume. Worth highlighting, we saw the impact to volume remain pronounced for small to micro cap companies over time. Simultaneously, the data shows increasing ownership for the group across almost all market segments on a variable price basis, or buying and selling combined with price change, indicating the group were net buyers and consistent with activity during the first half of 2020. This has led the cohort to become relatively larger owners of the market while still having a limited impact to pricing in a broad respect. We also analyzed this retail group by ownership across sectors, market caps, and short interest bands, and found a significant difference between the actual buying and selling of retail investors compared to shifts in their portfolio exposure resulting from price changes over time. This trend indicates their volume is driven much more by buying than it is by selling. Interestingly, activity over January 2021 was near the bottom of this range. Of note, these custodial movements represent net changes in ownership on a daily basis, which omits intraday trading activity but offers a view on the net impact to ownership collectively by the group. Our dataset supports the theory that retail investors, in general, remain a much smaller impact on volume and consequently price movement compared to both institutional investors and hedge funds. So that's the game, right? You institutionally drive up GameStop, you point the finger at retail, then you start to create a narrative that retail is this big worldwide movement, ape nation. You get the media involved, and you easily sell all of these people on YouTube who don't care about integrity and will run with anything that gets them more views and exposure, like we've seen happen all year long. This largely has to do with the sheer size and purchasing power, with some sources estimating the average Robinhood account size to be $1,000 to $5,000. Now, see, that's an estimate because they don't have the data yet. That's what they are wanting, is the average retail account ownership size. That's why they're after this data, to prove that we're not relevant as far as independent researchers. The hedge funds already know we're not relevant. So for those of you YouTubers that keep posting pictures of Fintel, user of Internet likes to do this a lot because he doesn't know how liquidity works. The institutions are the ones buying and selling. They always have been. It's clearly indicative of that in the 13 Fs if you go look through them. So it's all a facade. Always has been. But there is good news. GameStop has a future. That is the only good news, in my opinion. Now, this is a graph here, retail percent of volume. So we have in the gray average percent of volume for net retail custodial changes. And then we have in green the average total daily volume in billions of shares. So as you can see here, we don't even cross the 4% threshold. So this idea that we're all slapping the ass and increasing prices during January, February is not the case. We have no impact on pricing. Now, this is interesting. Short interest band rotations. We conducted a similar analysis on changes in retail ownership across stocks with differing short interest as a percent of float. Following the recent developments surrounding retail investors buying stocks that are highly shorted through the Reddit community known as Wall Street Bets, the place where, the narrative began, is evident that when taking changes in share price into account, retail exposure to stocks with high levels of short interest was significantly higher than those with low levels of short interest. Companies with short interest as a percent of float, between 10% and 15%, saw the largest increase in retail owners, rising by 152.9%. That's likely due to AMC, because this is around the short interest when everyone got in. Now, however, when taking a deeper look at the data and keeping share prices constant, stocks with lower levels of short interest actually saw a larger increase in retail ownership than those with high levels of short interest. A key takeaway here is that retail investors have been willing to hold onto highly shorted names as their share prices have moved higher, following the Wall Street Bets Reddit message boards call for diamond hands, another narrative being pressed on us, a phrase that retail investors have coined in reference to holding a position for the end goal, typically a short squeeze, despite the potential risk, headwinds, and losses. I personally think apes, diamond hands, and all of these catchphrases were created by the media and Wall Street to put it in our heads that we're this ape nation that's not affecting anything and is doing exactly what they all want and creating a bunch of noise, making ourselves look stupid, and at the end of the day, showing all of these hedge funds and institutions that we have had all this time, all year, to figure out what's going on, but we've chosen to follow the hype, or most of us have anyway. So things to keep in mind. People claiming institutional buying is bullish are misinformed. People claiming we are a community or an ape nation are those who have no knowledge or anything to offer to the community. So they simply consolidate and use others' exposure for their own gain in the name of ape community. Because keep in mind, without the ape community, what would they have? Nothing. They would just sit back and watch. They need the community to seem relevant. That's why we have fake lawyers like Lawyer of the Apes, who, if he really was a lawyer, he would be reading documentation, not sitting on Twitter Spaces, giving morons a place to circle jerk each other. Now, we're all convinced this is a big movement, yet trades, think about this. If we're so big, and if we're such a worldwide phenomenon, why hasn't the number one YouTuber, trades, broken 500,000 subs yet? Just curious. So, to all of you out there who are trying to misrepresent my objective here, and I was misrepresented last night by User of Intellect when he said that I was against this because I want everyone to sit on their hands. Absolutely not. I want you to learn something. I want you to stop regurgitating nonsense. I want you to stop pretending like you're relevant. I want you to stop pretending like you have this appeal to authority when clearly after analyzing your persona online, you're all just a bunch of clowns who won't and are too lazy to read the truth. And when the truth is presented to you, you jump back into your little hive mind narrative that you've created and you hide away and circle jerk each other into oblivion. Yeah, have fun with that. I firmly believe that the logic will prevail here and we'll come out on top, because those of us that come out on top will do so because we put the work in to figure out what's really happening. So again, this is just my opinion, but these people are worthless. If they weren't, they would have done something for the community that's helped. Like, I don't know, educate people on shit. Anyways, I'm not going to talk about this anymore. This is moving on from this. Just another, just not my first rodeo with this, but, we got to start thinking. This right here, this is an important question. If we're so big, how come no one on YouTube has broken 500,000 subs if this is so big? That's a question. Don't know.